Hello, chart watchers, and welcome to this Monday, March 19th Market Watchers live show with your hosts, Tom Bowley and Aaron Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. It's been a rough day so far in the markets. You can see the Dow Jones Industrial Average at the low of the day down 325 points. The S&P 500 down 42. The NASDAQ down 176 points. And the Russell 2000 following suit. Just a few days ago, challenging all-time highs. Today, down 24 points on the Russell. 10-year Treasury yield, after being up earlier today, has now dropped back down below Friday's close. Currently sits near 2.84%. Volatility, obviously on the rise today, now up almost 25%. Back up near 20. Those in the bearish camp want to watch to make sure that this stays above that 16 area. A move back down would signal more complacency. But for now, fear is in the air. The XLK technology ETF leading to the downside, down 2.5%. One of the big reasons, internet stocks are getting pummeled. There's news out on Facebook today. You can see Facebook down $15 to a key area of support down near 170. Talk about Facebook in just a few minutes. Semiconductors also having a rough day today. You can see down 113 points. And the big culprit there, KLA 10 Core, which is down almost $9 today, dragging the semiconductors down with it. And with that, let me bring in my co-host, Aaron. How are you doing this morning, Aaron?
I'm doing quite well. Beautiful morning, not too cold, and yeah, ready to look at these markets. What a surprise when I woke up this morning. Very interesting trading.
Yeah, fear is back, at least for a day. And I've got some real interesting historical data about this time of the month, which I'll talk about in a bit. And of course, Friday was quad witching day. Very heavy volume on Friday as everyone kind of repositioned different options and index options and various futures contracts and so forth. But this isn't unusual to see the market sell off like this after options expiration, but kind of rekindling some of the fears, I guess, that were out there just a month and a half ago. And we had that big selling in early February. So
yeah, it's the experts on Wall Street sentiment came in actually pretty bearish this week. So I thought that was pretty interesting. A little bit more bears there going into the week.
Yep, and we're going to get into the market in just a minute. I do want to say my bracket is completely busted. I don't know about everybody else's, but I was telling Aaron before the show, I had Virginia winning it all. Of course, I'm a Virginia Tech fan, so that was hard enough to pick Virginia. Mm-hmm. And they became the first #1 seed in NCAA history to lose to a 16 seed.
Oh, gosh.
Couldn't happen to a better program. Sorry to any UVA grads out there. Couldn't help it.
Yeah, the only team I had left was my daughter's alma mater of Auburn, and we all know they got clobbered yesterday. Pac-12 was out of it, in the first round with our one and only Arizona team. So kind of not as interested this year in what's going on. I just don't have a stake in it.
Yeah, the ACC, I follow ACC basketball, and it's always one of the better conferences in basketball. And you got Virginia, the #1 seed. They were the #1 seed of all, in the tournament, not just #1. They have 4 #1s for each bracket or each region, but they were the #1 of the #1s and got beat. And then North Carolina, which was runner-up in the ACC tournament, just got beat. I think Texas A&M beat them by 20 points yesterday. And of course, that was I was talking to my brother, and I was like, all right, well, Virginia lost, so I'm going to replace them with North Carolina in my bracket. And of course, that was the kiss of death for North Carolina as they went down. So I've given up. I'm not picking anyone else.
Yeah, well, next year we should do a stock charts poll and see how that goes.
Yeah, we have one for market watchers.
Oh, there you go. We should open one up on Yahoo. That would be a lot of fun.
Yeah, everyone will see that I don't prognosticate basketball teams any better than stocks.
I think you do pretty well on stocks, although I know we didn't do so well on our Monday setups, but we'll get to that later.
Or we'll sweep it under the carpet if we can.
Yes. So I'm going to say, let's just get on to the weekly schedule, etc. Okay, so this week we've got Bill Shelby coming in tomorrow for Everything Stock Charts. On Wednesday, our special guest will be David Keller. So you'll want to have have a look at David's charts. And then Tom has figured out his workshop. It's going to be on reasons to sell. And I think everybody would like to know, when to get out when you think is a good time. So today, though, we're going to start with those Monday setups, followed by an earnings spotlight with John Hopkins. He will be here with us today. And 10 and 10 to 1. The first stock will be Boeing, BA. We've had a lot of requests for that one lately. And finally, we'll finish up with my DecisionPoint report, let you know what DecisionPoint analysis is saying about the market and the big four. With that, I will pass it over to you for some technical news and catch up with you during Monday setups.
All right, sounds good. A couple things. I meant to put Ross Stores on that candle glance. And for some reason, I thought I had saved it and it didn't show up. But I do want to just mention in the NASDAQ 100, last time I looked, 99 of the 100 stocks were down. Ross Stores was the only stock in the NASDAQ 100 that actually was higher. You can see it's up 59 cents. So I just wanted to give some kudos to Ross Stores. That was the one stock that was able to avoid all the selling that we've seen in the NASDAQ and NASDAQ 100 today. Let's move on to the 10-year Treasury yield. No economic reports were out this morning and not really expecting any tomorrow. So the Fed coming up on Wednesday, they'll start their meeting tomorrow. It's a 2-day meeting. And of course, we're going to find out on Wednesday what they are planning to do with interest rates and what their policy statement is going forward. And I saw a website, I forget the name of it, but they were projecting a 94% likelihood that the Fed is going to raise interest rates on Wednesday. So not 100%, but sounds like pretty darn close. And the way that we've seen the yield continuing to rise and now consolidate, it's not too surprising. I think the bond market's building it in. And so I fully expect that we will see the Fed raise on Wednesday as well. I think the more important part is not whether they raise or not, it's what they have to say going forward, especially, maybe if they can calm some of the recent fears about inflation. I think that would be good if they, talk about inflation moderating and not becoming an issue later in the year, at least that they don't expect it to become one. I think that will help settle the market down. But heading into that, we shall see what's going to happen. Let's talk a little bit about Facebook. Facebook, apparently, Cambridge Analytica placed ads on Facebook during the presidential campaign back in 2016, and they harvested data from 50 million Facebook users without their permission. And so you can see that a lot of folks selling Facebook on this news. The stock gap down $8 at the open. There has been continuing selling all day. The volume's been very heavy. And I was talking to Aaron before the show, but I thought Bruce Fraser mentioned Facebook and the fact that it looked like there was some distribution taking place on Facebook. And you can see today with more selling and another big, huge red candle, we're getting down to some pretty key support area on Facebook. And this has been one of the stocks that really didn't bounce back. We've seen a lot of the technology stocks bounce back to the late January, early February highs. Facebook has not been one of them. So it had been a relative underperformer. And then the news hits today, stock going down. We really want to watch this 170 level, which we have traded below 3 times over the past 4 or 5 months, but we have yet to close below 170. So with this kind of volume, close below 170, in my opinion, would be very bearish for Facebook. Apple came out, and I think it was reported on Bloomberg that Apple is going to be developing its own iPhone screen. And while Apple is down a little bit, you can see $3 back down just below its 20-day moving average. And actually, I think a close above the 20-day today would be fairly bullish for Apple. We did have a reversing candle off the recent uptrend. We've seen now a pullback to test that 20-day. I think if it holds at today's close, I would actually be pretty bullish on Apple. But one of the companies that not very bullish on this news is Universal Display, OLED. And it always amazes me, from a technical analysis perspective, people ask me, you're CPA, why do you follow technicals? Why don't you follow the fundamentals? Well, here's fundamental news coming out. Look at what the technicals have been telling you here for the past 2 months. There have been a lot of folks getting out of OLED. If we pull to the weekly chart, check out the negative divergence. We got higher prices, lower PPO, and then we got that big move down. Check out the volume on the weekly chart here. That is kind of beating us over the head that there's some things going on. That's a lot of distribution over about 4 or 5 weeks. Stock dropped from about 210 down to a roughly 130 in 5 weeks on this kind of volume. That's a lot of folks getting out. So, technicals to me, it does tell you ahead of time, a lot of times before you actually see some of the news coming out. And it's legal. I mean, you might think, well, that's insider trading. It's really not. You've got a lot of these firms like Goldman Sachs that go out, they talk to management of companies, and they start finding out that maybe their revenue channel is drying up somewhat or whatever. Maybe they get some inclination that they're not going to meet their targets. And then they come back and they start selling for their clients. And the one way they're not going to come out with an announcement and tell everybody. Usually they're going to sell for their clients. Then you'll probably start seeing downgrades. I imagine we'll be seeing some of those coming up in the future for OLED. But I wanted to point out a couple things here for you, because if you notice here, this volume is part of, I just have this listed as volume separate. There is one other thing you can do here. I just want to show you. If you go down into indicators, you can pull up volume, and I'm going to change the order here. I'm going to change the height. And then the other thing you can do by placing volume as an indicator, you can use the overlays. So I could get a simple moving average, 50-day moving average, and I can plot this on here. So here is your volume. Now I've moved up. This is the way it would show up in an indicator window. So basically it's the same thing. Now I did make the window bigger. That's what this 1.0 is. If I did auto, it would be the same size, roughly the same size as this volume. But I wanted to get a bigger look. You can see, look at the volume and the average volume, how much more it was here. And there were a couple other things I thought worth mentioning. As we were going higher throughout 2017, just about every one of these pushes to the upside, we saw really heavy above average volume supporting those moves to the upside. But when we got to the last two, you can see the first volume bar wasn't too bad. But when we put in that last high, it was on less than average volume up here. So you've got slowing momentum in price and what I would consider slowing momentum in volume right before we started seeing all of this selling. So pretty interesting stuff, I think, on a technical basis. But wanted to point that out because I'm sure probably a number of you don't realize you can put that volume down in an indicator window, and you can then do a little bit more with it than just having it separated here. So I could actually turn this off. And then on my chart, you can see this other separate window, indicator window of volume would be here. And that's how you can get a moving average on your volume. Let's take a look. Oh, I wanted to mention, I mentioned in my blog this morning that the 19th and the 20th are the worst days of the calendar month, not just for March, but for every month of the year. The 19th has produced annualized returns of minus 28.27%. This goes back to 1971 on the NASDAQ. And the 20th has produced minus 30.74%. And you might look at this data and say, well, it's just 2 days out of the month. It's really not that big a deal. But keep in mind, this is every 19th and 20th of every calendar month since 1971. It's actually 780 trading days, which is more than 3 years worth of trading data. And so think about that for a second. Think about having 3 years worth of going down 30% on an annualized basis, 3 years in a row. Putting this into perspective, the S&P 500, when we topped in 2007, we topped at 1576 and we fell back to 666 at the low. If you had 3 years of 30% declines, your 1576 S&P 500 would be down to 540. So the decline, the action that we see on the 19th and the 20th of the month since 1971 is the equivalent of having 3 of the worst bear market years that we've ever had. And so it comes after options expiration. The other thing probably worth pointing out is that Mondays and Tuesdays are the worst days of the calendar week. And that goes back to 1971 on the S&P 500. It's not as bad and not as pronounced on the S&P back to 1950, but those 2 days are pretty bad days for the NASDAQ, especially Mondays. So anyway, I wanted to point all of that out. This isn't that unusual considering what we typically have seen in the past. One last thing before we move on to upgrades and downgrades, I'm going to let Aaron go into that. I did want to mention that today, or this past weekend, was a Chart Watchers weekend. Those of you who do not get Chart Watchers, you can simply come to this blog page. Just click on the blog page on the right-hand side. You can type in your email address, click sign up, and then it'll be sent to your email address as soon as it's done or as soon as it's published. So this is done twice a month, first and third weekends of the month. And if we go into this weekend, I thought it was there were some interesting articles. Let me pull up just the Chart Watchers blog. You can see John Murphy wrote about a triangle on the Dow. If you scroll down to Arthur, he also talked about the Dow coiling up as it approaches potential breakout. Now, of course, we are struggling moving to the downside, but I believe this triangle continues to be in play. In a reversal, we could see that spring and coil on a potential breakout down the road, but we'll have to wait probably through today and maybe tomorrow before we see how much damage is done technically there. Greg Schnell wrote about the regional banks. I think as interest rates continue to climb, I think that's a very timely article to take a look at some of the banks. I'd pointed out just a couple of seasonal winners on the NASDAQ 100 as we head into April and May. So just some seasonal historical strength in a couple of stocks you might find interesting there. John Hopkins, who'll be with us in just a few minutes, talks about patience and how you want to wait, try to time your entries and increase your reward to risk. And then, of course, Erin, who had her workshop on Friday talking about volume, followed up with a really interesting article on why volume is important in her Chart Watchers article. So with that, I thought it was a great Chart Watchers weekend, but I'm going to turn it back over to Erin and let her go through a couple of upgrades and downgrades.
All right, you got it. Today, one upgrade we're going to look at and two downgrades. So I'm going to start with the upgrade, actually. Let me get to the proper list view here. And I'll just click there. Okay, so I was checking this chart out, and I actually think it looks pretty good, and good thing, because it is an upgrade. It wouldn't come up on my list just because of that 2050 negative crossover, but we're at some pretty interesting support here, and that bounce is looks pretty good. I'd like to see that PMO start to turn up. It's not even decelerating that much, but I really like the fact the scooter is starting to hook up. And we can see with on-balance volume, we had all of that distribution. So now it's time for some accumulation. So we'll see what happens with that one. But not too bad. I thought that looked pretty good, especially since it's coming on an upgrade. The downgrades, not overly impressed here. Although, the problem with the PMO when we don't have huge amounts of data is it does take it time for it to figure out what its actual normal range is going to be. But we have a buy signal, of course, off of this huge move upward. But, we got the downgrade and we're really close to, we busted through that top of this overhead resistance over here. And if you went just by the closes, you'd be in pretty good shape here. So, in fact, let me go ahead. I'm just going to annotate real quick here. Support and resistance line here. So if I'm looking over here at closes, I can put it right about here, and you can see that we're trading almost above that area of overhead resistance. So not bad, but with the downgrade, obviously that $30 area is going to be extraordinarily important. All right. No, we won't save those for now. Okay, final downgrade, ABUS, Arbutus Biopharma. Nice landing on the 200-day EMA. If it could hold on to that, that would be some very interesting support. You can see it's been in this trading range for quite a while. So, this is the bottom of that range. And then, you could just take that little ride up to the $6 range. But I would watch very closely, because if we lose the 200-day EMA with a close below it, you can see we can dip below it a little bit. That would be a big problem. And yes, I know I have a PMO sell signal. It's on a downgrade, so not a surprise when you have a depth of movement here that we did see on Thursday. So not a big surprise the PMO would be that way. It's mostly trending upwards, so not too bad. But, for a downgrade, Tom, I don't think it's too bad with that stop there on that 200-day EMA.
Yeah, it's been consolidating and it's in a good space. So I would think that the most likely move would be back to the upside.
Yeah, nice little trade. I always like to see those trading ranges that stay pretty consistent. And this one's been in play since, January. Not bad. So that's it for the upgrades and downgrades. And I guess now it's time for those Monday setups. I don't really want to look at mine. I don't know who had the worst time. I don't know if we'll be able to tell here on our Monday setups page here, but that's where we started. So I was at $18.45 for my IVC. And let's see.
Yeah, I've got it down. I've got you down about 5%, and I was down probably about 2%. But the S&P was down almost 3%.
Yeah.
It's kind of...
when I do give these Monday setups, because, I don't know if you guys, run out and buy what we talk about, but I always like to put that stop in there. And so, we would have been stopped out on Friday. It's hard to say where it would have landed, but we'd still probably ended up with a not so great loss here. Obviously, you did much better. I mean, it was such a great setup, though. Look at that.
Well, I can't see your screen.
Oh, shoot. How did I do that? Oh, I know. My bad.
That's all right.
That's okay. Thank you for letting me know.
Yeah, you can pull it up, though, if you still like the chart.
No, I don't, honestly, but, I got the sell signal on it, but it was such a nice little setup, but that just tells you, chart patterns don't always come together. That overhead resistance turned out to be a little bit too much for Invacare. So, yeah, I don't care for it. As soon as it went down below that $18 range, it not looking good to me. Lost the 20 and the 50-day EMA.
And your PMO looks like it had that little false breakout.
Exactly. That's exactly right. That, that head fake. So that was my beauty on my chart. Which one did you have again? Let's see.
I had WLH, which actually it had bad news last week. There were a number of housing reports that came out that weren't that great, and the stock made a good move. I own this one, so I know it was.
It still looks good. I mean, I would say at least on my, as far as my technicals go, I mean, I like, it's holding that rising bottoms trend line. You could even draw across the top here an area of that overhead resistance. You get that nice ascending triangle. I would look for that breakout. I think holding that's not a bad idea.
Well, I think the home construction index is trying to put in bottoming head and shoulder pattern. So we'll see whether or not that happens. If we do continue to hold on the DJ USHB around the 820 level and we can move back up, say above 870, I would feel much better about this group and about the stock. But in the meantime, it's just consolidating. So we'll see. But again, kind of a difficult week trying to trade upstream.
Exactly.
Makes it a little bit more difficult, but it's a new Monday and we got new stocks to take a look at. What do you have?
So I went out of the box today. I put in 2 shorts because right now I'm short-term bearish. So I figure, if this is a 1-week deal, I should, if I'm saying I'm bearish, I might want to pick a couple shorts. And honestly, when I ran my scans and I really, tweaked them just to get more stocks, as soon as I know I'm like having to work to find, good buys on my scans, it tells me that I really don't want to be buying into the market at this point. So I figured I would put in a couple of shorts, although my pick is not a short, but I did feel like I should include some. So I'm going to show you those first, if that's okay with you.
Yep.
All right. EQT Corporation. So it came up on my scan because the PMO has been falling for the last 3 days. I love the fact if this is a short, I like that we got that top below the 0 line. You can see the previous top. It's lower than that previous top, so that's a good sign if you're looking for a short. Obviously, OBV, you can see the scooters in the basement. I would be looking for a drop below that $49 range, which I think we're already in there, yeah. And I would be setting my target down here at that $45 to $46 range for a short here. So I thought that one was kind of interesting for that. Johnson Controls International. So as far as this one as set up as a short, of course, my scan looks for the reverse configuration of my EMAs. So I want them configured as negatively as possible. And as you can see, 5 is below the 20, below the 50, below the 200. So that's a good short setup. I've got a double top here, a reverse flag in the making here. The PMO sell signal is now kicked in. I don't think it had kicked in when I got this on my scan earlier. So I'd be looking for a drop down to that 3450 range on Johnson Controls. So those two are shorting opportunities. And again, I know you and I talk about, I don't want to short into a bull market, but, for this exercise, when I think about it, I am feeling pretty short-term bearish right now. So I came in last Friday at the end of the day that I was going to be going in bearish this week. And so far, we're seeing that. So Hilton Worldwide, that was a buy that came through. You've got a PMO buy signal just about here. I think you could make a case for a flag formation when you look here in the thumbnail. And so your target you'd want to see that target, the length of that flagpole. So I would be looking for a move up toward that overhead resistance there. I'm not thrilled because there is that declining tops trend line, but I think, as I said, I think you could still see a move right up there at least. We're sitting nicely on that 20 and 50-day EMA. So I thought this one looked interesting. And like I said, my setups for the buys, none of them were particularly exciting. So, and here you go. This I thought was one of the best buys of what came up, and it's not particularly exciting, to be honest. The one I picked is Polo by Ralph Lauren. And it hasn't done what it needs to do, which worries me a little bit because, this is what happened with Invacare to me last week. I hadn't quite gotten that breakout, a solid breakout. But I like the chart. This is actually an ascending triangle, which is a bullish pattern. And, if you took the length of this pattern and added it to that resistance area, interestingly puts you right about at that 120 mark for overhead resistance. So I like this one. I'm setting the stop less than about 103. And I do that because I'm looking at this point here, but that would be really in a longer term basis. I would probably tighten it up to about 105, honestly, since I am feeling kind of bearish about the market. And again, I wouldn't be running in to buy this anyway because I'm not feeling particularly confident in the market over the next week. And I'll discuss that in more detail in the DecisionPoint report at the end of the show. So I would, I'm at this point, I had it at 109.67. Looks like it's gone down a little. I'll take that. And yeah, my target's up there around 120. So yeah, it's decent risk reward, but like I said, none of these look overly exciting, but I opted to go with a buy instead of a short as my pick this week.
All right, so you got RL on 109.45. Okay.
And I'm going to actually update this to say that.
All right, go ahead and update that. And I'm going to go ahead and take a look.
See, it's already back to 58.
That's all right. We'll give it to you at 45. 109.45. Okay.
Sounds good.
All right. WLH, this was the one from last week. And actually, beginning of last week looked pretty good. It needed to get through the 50 and also this little reaction high here. You can see also the lows coming in. $28 was a pretty big level. I actually had it, thought about trading it, didn't, of course. And now I've ridden it back down. But WLH, I think, still looks pretty good to me. I'm hanging in there. If we get a close below 26 and the volume picks up, that would maybe spook me a little bit. You can see today's volume, even with the market selling, is actually hanging in there pretty well. And home construction doing better than a lot of areas today. So I'm going to stick with this one for now. But for this week, what I am going to go with, and I love this, looking at the selling that we're getting in the market, I think that's setting up some really nice trades. So I'm pretty excited about it. I like GWRE. This is the one I wrote about in my blog this morning, so I am going to go with it. I actually bought my first lot of GWRE on Friday, and I am looking to add if it hits 83 today. So it is got as low as 83.19, sitting at 83.49 right now. But I think this is a pretty key area of support. It had gapped up, you can see here, with very heavy volume after its earnings reports. I think it's in a great area in the software space, even though some of the technology is getting hit today. I think that the pullback has created a really nice reward to risk trade. Not that it's guaranteed to work, but I do like the reward to risk. I think if we get maybe a move back down into the 82s intraday and a hold back up over 83 would be kind of a perfect setup. Get maybe a hammer to print, very similar to something like this that we saw at the beginning of March, where we took out the prior lows and then we reversed, had a strong reversal, and then started moving higher. Might look for something like that if you wanted to wait to see if maybe there's a reversing candle that prints. But I like accumulating in it in this zone. So
yeah, that volume pattern is pretty much exactly what you would expect. It's drying up there at the end of this declining trend here. So it's the volume pattern is right there with you.
Yeah, and I like price support. You can see how many times we tried to get through 83, couldn't do it, and finally when we did, the volume picked up on this move through 83, got up to 93 after earnings, and now it's made its way all the way back down to 83. So I like these kinds of setups. But again, that's my strategy. I like weakness. I like to buy into weakness. So that was my main pick. So that's what I'm going to go with as my pick for this week. It is at 83.49. So that is the level I will go with. I'll go through a couple of other stocks, though, that I thought looked interesting. I don't think this one, and by the way, if I go into my blogs, I'll come back to this in just a second. But if I go into my blog and right up here, my live chart list every week, and I made a mistake in my blog this morning. I didn't put the link in. I said to click here, and you can see the rest of my setups, and I forgot to put in the live link. I did go back and adjust that. But if you click on that link in my article today, it'll bring you to this page. Or if you just go into my blog and click on that live link, you'll see the setups that are in here. So, of course, here's GWRE. And again, talking about this range right in here that I'm looking at. But I just wanted to make sure you were aware of that. And then let's go back and let's take a look at HRB. This one I did not include in my setups, but I do like H&R Block. Here was the big gap up after earnings. Didn't quite make the breakout. And you can see this one sideways, more sideways consolidation. So maybe it fails. I think the two key areas are the 20-day moving average, which reversed nicely back on Thursday. And then we've got the bottom of gap support down around 25.5. If we were to get back down there, I think that would be an interesting entry as well. So I think current price down to 25.50. Fairly tight stop below 25.50 on a close, and then target would be up closer to 28.50. The next one, Bojangles. This one actually is having a nice day. This one was in my blog this morning that I put in there, but here we saw the pullback, and here was the prior resistance. Finally broke through. Check out the volume on the breakout, and now we've pulled back, and on this pullback, we came right down to price support. Today, with the market getting hit hard, Bojangles actually up 3.6%, doing very well. The rest of these I didn't have annotated for you, but they are annotated on my blog. DDS, Dillard's, here was the gap up, very heavy volume. We kept going higher. Got some pretty good support. I'm going to say 77.5 up to 80. We got down today as low as 78.54. We're back up over 80. I like this tail below the 20-day and coming back up. I think Dillard's is very interesting. RBA, Ritchie Brothers Auctioneers. This was earnings related. We gapped up. We were trading up to 35 and change, and then we reversed. That took us back to the 20. We've seen some recent weakness on just kind of average volume. I think it could get back down to this low here, maybe around 30.25. That would be a pretty nice entry, especially if we have a false breakdown and we hold on a closing basis. FOSL, I own this one. I've been building a position here over the last couple of days, but I do like the possibility that it gets back down to price support, maybe that 50-day moving average. So it may have a little bit more downside, but I think it's got a ton of upside to get back up to 17. I could see this the start of an uptrend, and off of this big move, this could be some sort of a cup, or maybe coming down left side of a neckline ahead. Maybe we get back up to 14 and change, put in the right side of a neckline, one more pullback maybe, and then we go. But I do like the reward to risk on FOSL as well. So there you have it. Those are the setups for this week from Aaron and me. And we'll see. Hopefully we get a better market to trade. But if not, we might just be looking at trying to make excuses again next week. Who knows?
Yeah, we'll see. Hopefully better. I'm kind of interested to see what happens to those two shorts that I put in there, since I haven't done that before for our Monday setup. So it'll be interesting.
Yeah, and for those of you who are out there follow the show and wondering why we don't ever short, for me, I can only say for me, if I think we're in a bull market, which I think we still are, I don't short. So I've said over the past 6-7 years, the only thing I would short is gold.
Yeah, and I at this point, just because I'm bearish this week, I mean, we're talking very short term. That's why I figured I'd just put it in since I'm short term bearish at this point.
Well, it would have been a good strategy last week for sure with the market.
Yeah, apparently. I'd have won.
You would have won. You probably could have shorted just about anything and you'd have won.
Yeah, exactly.
Oh, well. Well, we are going to move on here. So let me move on to the earnings spotlight. This earnings spotlight is brought to you by earningsbeats.com. Earningsbeats.com is a trading service designed to provide high reward to low risk trades. Earningsbeats.com only trades companies that have beaten Wall Street estimates as to quarterly revenues and earnings, and they'll teach you to focus on that combination of strong fundamentals and strong technicals. Learn to exercise the patience and discipline of an experienced trading service. Earningsbeats.com, better timing, better trades. And Mr. Hopkins, I know your article in Chart Watchers over the weekend talked about that patience and not chasing and waiting. What are you seeing as we go into getting closer and closer to another earnings season?
Well, first of all, great to be with you today. Thanks for having me on.
Oh, you're very welcome, as always.
Yeah. I was listed just before. I've got some stocks to go over to, I think, demonstrate the power of staying on top of stocks that report great earnings. And I want to show you a few of those stocks and how they look relative to the market. Mm-hmm. And I think once the selling is over, which it will be at some point, there'll be some great opportunities. The other thing I want to mention is you talked about holding off on shorting, and I have to agree, like 100%. You get a few periods like we've had recently where it seems like it would be a great idea to short. But if you tried to short this market over the past couple of years, you would have gotten murdered. I mean, absolutely creamed. Now, you might have a couple of days, where you make some nice scores. But I think overall, if you had been in a shorting mood over the past year, year and a half, your capital would have been reduced dramatically. So people sit there and say, geez, I hate missing out on this shorting, but you didn't miss out on it when the market was just moving up nonstop.
Mm-hmm. Yeah, and I think too, it's not that there aren't stocks that go down. There are clearly stocks that go down, but when you got a market that's gone up as much as this one has over the course of the past, like you said, year and a half, the opportunities, the number of stocks that you could make money shorting obviously are a whole lot less than if you were on the long side. So if you can get the direction of the market right, you got a much better chance to make money. Doesn't mean you're going to pick the right ones, but it gives you a much better opportunity to ride the market if you got the direction.
All right, let me go over 6 specific stocks. These are stocks on our chart list, and these are stocks that we scan the market to see which companies beat earnings. They become part of our chart list, and I want to talk about 6 specific stocks, and let's compare them. And these are all the stocks that had great earnings, and let's see how they look compared to the rest of the market. Let's start with Ciena. C-I-E-N.
Oh yeah.
You take a look at Ciena. I mean, if you had the Nasdaq chart or the S&P chart up there, you'd see they're below important technical levels. Whereas Ciena is just miles above not miles, but way above key technical levels. And if we get some more selling, we can get this stock down anywhere near its 20-day moving average. To me, this is the kind of stock you want to go after, a stock that holds up so well when the rest of the market is getting slammed.
I think, too, if you look at this one, I mean, first of all, we went up to 27.5, and we go back to June, we can see that overhead resistance providing some sellers. and we've pulled back. But the group that Sienna is part of, which is the DJUSCT, that's Telecommunications Equipment Index, we've been going higher throughout the year. I mean, we just broke out the new highs, even though we had that huge decline back in early February. We've broken out. So this is definitely a group that has been performing really well. And you can see here, Sienna has just started to break out against the group. And it's also just broken out relative to the S&P 500, this downtrend that it was in. And then here's the group against the S&P. So yeah, I agree. I think might need a little bit more selling. Maybe we hit that rising moving average.
All right, another one is KFY. And if you take a look at Korn Ferry here, you can see when it reported earnings, you can see the big spike in volume. And just look at that stock, compared to the rest of the market. So if we get a pullback on this stock, I'm going to be interested because people gravitate to stocks that have great numbers.
And the DJUSBE, which is the Business Training and Employment Agencies Index, this is only down about 1/3% today. So this group's really not getting hit too much to the downside. And clearly there looks to be some accumulation taking place in KFY.
Here's another powerhouse, Autodesk, ADSK.
Yep.
And I like, the beautiful gap up with massive volume on earnings. Come back to the 20-day, come back to Papa, right? And when it does, we'll get involved in that stock, have a tight stop in case it goes against us. I will, be looking forward to a high reward to risk trade here.
Yeah, and this is another one. Software has been, kind of on fire. I talked about this one when I was going over GuideWire, GWRE, earlier in my Monday setups. But this has been a group that's been really strong. And with earnings, Autodesk finally broke out of this the doldrums that it had been in relative to the software group. And you can see with that last spike, we actually took out the recent relative high, Autodesk versus the S&P 500. But here, without a doubt, you can see software is very, very strong, continues to outperform the S&P 500. And these are the kinds of areas of the market that I like to be invested in, money that's been rotating in there. I would look for that to continue. So if you're getting stocks that are just starting to make some nice breakouts and performing well within that group, it can be a nice trade on a pullback.
All right, then a couple quick other stocks. VEEV, V-E-E-V. You'll see a pattern here. Just a great move.
Yep.
On solid volume. A little overdone. Come on back. Pull back. We get some more selling in the market. My point is, if we get more, I'll tell you something. If the market reverses here, I expect these to hold up quite well. And if the market pulls back more, they'll pull back some. But then I think they'll be ripe for trade.
Yeah, it's interesting. This stock's only down 1%, yet software is down almost 2%. So it is outperforming today, and it was overbought. You'd think that, with the market down and software stocks getting hit a little bit today, you can see it dropping here. We really haven't seen a whole lot of weakness yet in this particular stock. But yeah, again, that rising 20-day would be very interesting. And if it did somehow, market was really weak and we broke below the 20-day, I think you're going to find great price support if it got back down to about 67.5.
All right, here's another one, AAXN. Now this one's pulled back a little. What's that?
I was just going to say, these are definitely some of the really good reactions that we've seen to earnings over the last month or so, which I think is it's important, like you said, to kind of keep track of them. Doesn't mean you chase them and jump in, but these are some companies that have definitely shown signs of major accumulation and in some nice areas. I mean, this is in the defense space, and the defense stocks have been continually rising as well. So go ahead. I think it's another great stock to watch.
Yeah, and the last one is ETSY, ETSY.
Oh, yeah. Aaron remembers this one. I think.
Yes.
Aaron, you still own this one, Aaron?
No, I sold it on that big move up. Like, I left some money on the table because it went a little bit higher than that, but I was more than happy to take my.
Oh, yeah.
Go. I didn't need to wait for that. The extra 1 or 2 days of upside after that. I didn't want to chance it.
Yeah. I try to steer away from this during lunchtime because when I say the word ETSY, it just gets me the stomach grumbling,
Well, I think technically it might be Etsy, but if you
I know, but it's noontime, so it's ETSY.
Yeah, I'm surprised.
My daughter's introduced me to Etsy.
I'm surprised you didn't bring in some restaurant stocks. Normally, around this time you start throwing lunch at me.
Yeah.
Great place to buy wedding stuff on Etsy, gotta say.
Okay.
Not that
Anyways,
I work for them or anything, but
Yeah. Anyways, Tom, so all 6 stocks we just went over, same characteristics. They reported earnings, they beat expectations, top and bottom line.
Yep.
They've held up extremely well. I wouldn't chase them. I still wouldn't chase some of these, because they could definitely pull back. But they're on my radar screen. They might continue to go higher, but normally they'll come back to you. And when they do, I think they'll be high reward to risk candidates. And I think that's a good strategy for folks.
Yeah, and I think Etsy too. This is in the Specialized Consumer Services Index. And you can see again, another very strong group here in March breaking out to new highs over that January high. And that's kind of what I'm looking at, the barometer, because we saw the NASDAQ break out, but we didn't see the Dow and the S&P. So if you've been able, as an index or as a group of stocks, if you've been able to clear that January high, I think it pretty much, highlights the fact that you are among some of the better performing stocks on a relative basis. And Etsy, if you go down here and look relative to its peers, it's one of the strongest. Of course, relative to the S&P 500, it's just blowing it out of the water. And then the stocks, the actual index that Etsy is a part of, is relatively strong versus the S&P 500 showing strength. So, yeah, I think these stocks that you brought up are all very good stocks to at least keep in mind as we go down the road. We may get some opportunities. And because these companies have reported within the last month, I think all of them that you gave me have reported in the last month, we know we have a couple more months before we have earnings coming up again.
Yeah. All right.
Yeah. So do you still have your special at earnings beats? Is that, or did you?
No, it's still up there. Yeah, it is. It's a free trial offer. It's 30 days. And what's great about this is it's a good time for it, because it's unbelievable, Tom, how quick time flies. But you realize in about 3 weeks, earnings are going to start up again. But we just added a bunch of stocks to our chart list. And people who are Stock Charts members, if they want, they get access to this chart list. So instead of having to go out and scan and actually find companies that beat earnings and look at the charts, we've done the work. So it's a great way to get a chart list started. Then you can go into Stock Charts and you can take that list and you can put in the criteria that's most important to you. What do you look for as a trader? Moving averages? Do you look for divergences? Do you look for volume? You can go in and you can, work with our chart list to come up with stocks that you consider to be desirable trading candidates.
All right. So as part of the free trial, if someone signs up and they're a Stock Charts member,
yes,
you can send them the chart list and they download it and they have all of the annotated charts and everything. 250
of them.
Okay.
And we changed that. And obviously, as we get closer to earnings season, it might tailor off a little bit, but I can't believe that it's already, we're moving into April. And once we move into April, thousands of companies will be reporting their earnings, and being able to track the ones that beat earnings and keep them on a list and work with that, I think is a powerful tool.
Yes, absolutely. I use it every day, and just about every trade I make comes from my strong earnings chart list, which I guess is the equivalent of your candidate tracker that you have.
Yeah, we call it a candidate tracker, but it's really a chart list.
Yeah. Awesome. Right. Well, it's always great to have you. I appreciate you sharing your thoughts, and I like the stocks you brought in today.
Okay, have a great week.
All right, you too. And there he goes, Mr. Hopkins from earningsbeats.com. Yeah, I tell you, for me, I don't know if I could trade without that chart list anymore. It just gives me more confidence to know that the stocks that I'm trading, just about all of them, I do own, as I mentioned in the Chart Watchers article, I do own NetEase, and I don't think NetEase, I'm not sure if NetEase is on that list or not, but I like the technicals on NetEase. Of course, I don't like it as much today after selling in many of these internet stocks.
A bad day, yeah.
Yeah, you can see it's having a pretty rough day, down 4% today. But one thing I did mention in my article over the weekend is NetEase. This is one of the stocks that actually, okay, did you grab this screen there?
Yeah, I'm trying to.
Okay.
Go right ahead, though. I'm getting lost.
All right, I'm just going to show everybody before we get to 10 and 10. Here we go. So let's take a look at the seasonality on NetEase. and also Baidu, I think, was the other one. But if you take this and drag it back over the last 19 years, look at April and May for NetEase. These are average returns. And I can make this a little bit bigger. Maybe this will help everybody. But here you can see in April, we average over the last 19 years, NetEase has averaged going up 9% during the month of April, 8.5% during the month of May. So 17.5% has been the average April and May over the last 19 years for NetEase. Now, that doesn't mean that, we're going to go higher. As you can see, only 65% of the time have we gone higher in April and 76% of the time in May. So it's not a slam dunk guarantee, but you can see the tendency is for NetEase to move higher. And the other one, which wasn't quite as good. Actually, that's the chart. Let's go back to seasonality. And then I will let you have it back here, Aaron. But over the last 14 years for Baidu, look at April, 10.8% average over the last 14 years. It's gone up 75% of the time. In May, only 58% of the time higher, but it does average going up 4.8%. So these were two of the strongest stocks in the NASDAQ 100 from a seasonal perspective heading into April and May. So I just wanted to point that out. And now I'll turn it back to you. Don't know if you're muted.
I was.
Okay, there you go.
I need to, I can't figure out why I'm not getting my, there we go. Okay, perfect. All right, so here is the RRG of the requested 10 and 10 stocks. I did want to make mention, if you're here live and you are in our chat room, you can like other people's symbol requests. So maybe you don't have one in particular, but you like the idea of seeing a particular one, go ahead and hit that like button next to it. And the one that comes to the top, I will make sure hits the 10 and 10. I can't guarantee the rest of them will, but the top one will hit the 10 and 10. So tomorrow, this week, go ahead and start liking those symbols. That'll help us pick some good ones. All right, so here's what we had as far as our requests today. A little bit fewer than normal. The ones I thought were really interesting, though, if you zoom in here, we want to look for those that are traveling in a northeast direction. So we have a couple of those. KNX, I have to tell you, I didn't include it in my Monday setups, but it did come up on my PMO scan. I don't remember why. I decided not to put it in there, but there was a reason. That looks pretty good. Hope, that looks pretty good. I think there's some hope for hope. So with that, I'm going to just pass it back to you, Tom, and let's see the first one, Boeing.
All right, Boeing. Let's pull it up. We've talked about Boeing. I actually like Boeing. I think it's one of the best stocks in the market. I think it's been doing fantastic. You can see at the end of February, we did break out to a new high. It had reason to struggle early in February. We had higher prices. We had that lower PPO. So we had a negative divergence, which typically leads to a 50-period test. We didn't get that here. But when we moved one more time higher, you can see we still had that negative divergence in play. And now we have gotten the 50 test. We've moved just a little bit below center line. And I think as long as this 320 to 330 area holds as support, I feel pretty bullish about Boeing. So I think that these pullbacks are, sometimes they create opportunities. And you might look at it and say, well, the volume is really heavy, but we didn't lose any major price support. And the stock, after moving up as much as Boeing has over the past year, I mean, it's due for at least some relief from being so overbought for so long. You can see that the RSI back in January, we're up over 90, which you rarely see on a stock. I mean, 90 is a very, very overbought area. So I think that Boeing just needed time to consolidate. I think that's what's going on here. I like Boeing.
All right. See the next one. Let's look at Knight Swift Transportation, KNX, and then I'll be able to look at it and see why I didn't choose it.
Yeah, I think this one looks pretty interesting. Actually, let me look at the weekly, see if that, well, it doesn't show as much. I was thinking maybe it might show a cup, but it's not really showing the cup. But you can see a very, very strong chart that just continues to move up. Maybe the daily would be a little easier to annotate. Let's take a look at a key area of gap support right here. Now, you noticed on some of my setups where we got gap ups and I'm waiting for moves back down to test gap support. Take a look at night. We gapped up to almost $52 from 45. 5 days later, we're back down in the 45s. Now, you can chase if you want and jump in on the open, but I prefer waiting and letting these stocks come back down to key support levels. Here, night came down, almost filled its gap, reversed back up. I think this one's going back up to test its high at 51.5 or 51.75, whatever that level is. So the question is just setting up a nice reward to risk trade on it. I think it's now starting to turn back up on its PPO. So I'm willing to bet that rising 20-day moving average is going to hold. So I could maybe put a closing stop in there, and my target would be up at that 51.5 area.
All right. Let's see. The next one I'm going to have for you is Hope Bancorp.
All right, Hope. Yeah, I really like this one, and it's in a good space. I like the banks. I think rates continue to go higher. The yield goes higher, and that is typically a very good catalyst to send bank stocks higher. So there are a couple of areas maybe to watch. I'm going to say that there's probably the most support coming in right at about 1775. That's where we see multiple tests. We did go a little bit below here, but for the most part, that's been holding. So I think we're in a range, but it's coming off of an uptrend, sideways consolidation. There's another perfect example of a long tail where you're breaking out above prior highs. It doesn't stick, and then we sell off short term. I would like to see a confirmed close over 1950, but I think we're going to get it eventually on Hope. I think this one looks good.
All right. How about Marriott, MAR?
Yeah, this was the one from our segment last week that I had to go against you. Remember, you were bullish on Marriott, and I had to tell you why I didn't like it.
Yes.
Now I'm going to tell you why. What's that?
We don't always agree.
No, well, we did. We had to disagree on that, if you remember. Now I'm going to tell you
that's right.
Yeah, now I'm going to tell you why I like it.
Okay.
For real. But I think right now it's squeezing. I think it's just squeezing into a little bit of a triangle. So I think if you connect the highs and connect the lows, I think it's off of this long uptrend. It's consolidating, and you can see the PPO just sitting here at the center line, not really doing anything, just making everyone bored. I think eventually it's going to break back to the upside. So I think a test of this rising trend line would actually be a very strong buy signal to me. I like Marriott.
Okay. Next one is going to be, let's see, SWK.
Yeah,
Had it be sealed with a kiss.
The reason I went against you on the Marriott, of course I had to, but remember back on it was the weekly or monthly charts. I forget which one I pulled up, the long term. It was just so overbought and it could use some consolidation, but we're getting it in the short term, but I do think we'll get another breakout. Anyway, let's move on. Stanley Black & Decker, SWK. We did put in a double bottom, and it occurred at gap support, although I don't really think this is a major gap support. These are the gaps I'm looking at over here. But I think the area of support is right here between about 151 and 152. We do want to try and break this trend line where we've been trending a little bit lower. I do not believe we're going to break down. But my stop on this stock would definitely be a close below 150. And to the upside, what we're looking for is to break this trend line and eventually clear this recent high, because we got the 50-day coming in right at about that area as well. And on the most recent lows here, you can see we actually had a higher PPO. So there's positive divergence telling me we're most likely to get that 50-day test. So I think we're going to move up to 162, challenge that high. And then the question becomes, do we break out above 162 or do we break down below 150 first? And my bet would be on breaking above 162.
All right. Let's see. Okay, the next one is VLO. I believe that's Valero.
Valero, it is. We got another one that's squeezing here, trying to make a little bit of a breakout. Not quite there yet. I think we've got some relatively easy resistance to see. Coming down here, we had a reaction high, tried to get back through about 94.5, couldn't do it, and then we've had multiple failures. And notice, every time we put this tail in above the line, we pull back. And so that's, again, one of those signs where you get these false breakouts. I don't like to hold through false breakouts. And so for VLO, what we want to do is get a confirmed breakout. We don't want to do it on an intraday basis. We want to get a close above 94.5, and we want to do it with increasing volume. That would suggest to me that we're going to resume the trend, which before clearly was an uptrend.
Mm-hmm. Okay. Let's see. The next one, EXAS.
Exact Sciences.
Mm-hmm.
Well, I would like to see this one reverse today. It did have somewhat of an exhaustion gap here, as you can see. Very heavy volume off this downtrend. Put in that long tail down around 39, maybe even 38 and change. Came back up, closed over 42 on very heavy volume. That's a pretty good sign when you're breaking down. Not too many technical buyers are going to be out there. So usually when you get a reversal, it's an indication that market makers have taken a long position, and that's a pretty good indication. That's why I love the reversing candles to begin with, because a lot of times they do kind of paint a picture of what market makers are doing. But here we reversed off of that, made a move up. Now we're coming back down with the PPO rising on the most recent high. I would like to see this 20-day moving average hold on today's close. If we get a tail below it and come back up and close above, I feel much better about it. So I would be watching today's candle. So as far as annotating this, I think I would be just kind of watching and highlighting that candlestick right there, and let's see how we finish today.
Okay. Let's see. Next, we will make ASX.
Yeah, that's a semi. Yep. I like this chart. I like the breakout and then the pullback to test the rising 20-day moving average. So the breakout comes across, taking out that high from mid-January, maybe third week of January. Made the breakout. You can see the volume pick up on this move. Pulled back, failed to hold price support, but now we are down at that 20-day. And a lot of times I will see prior price resistance, which when you break through it should become price support. Sometimes it doesn't hold. You get a little, I used to trade and get out on those moves. Sometimes now I actually use 2 entries at price support in the rising 20-day. I'd be more concerned, I think, if this stock were to close below, say, 710. But I think as long as it holds that level, I would look for it to return back up to that recent high at 750.
All right. And let's see. Coles, KSS.
Yeah, I think it was having a decent day today relative to the market. And I still like Coles. I've talked about this one in the past. It's, I think, sideways consolidating off an uptrend. So let's mark the price support and resistance. I think resistance is pretty clear. That's where we've had multiple tops, have been able to get through. Here is your price support. So I'm going to say 59 to 68 is our current trading range, and we're sitting at 63.5. It's almost right in the middle. So if I wasn't in it, I don't know that I would do anything. If it creeps down closer to the 59.60 area, I like it on the long side from a reward to risk perspective.
Okay. Let's see the last one, Lumentum, LITE.
All right, another one that's been very strong, pulling back. You got both price support and the 20-day moving average meeting at the same place. So I really like this when you get a breakout above a prior high like we did here. And on this move, you can see the volume really picked up and accelerated. Now we're pulling back. My favorite type of candle would be an intraday move down below these 2 levels. So let's say down to 64, 64.5, maybe even lower intraday, and then come back up and hold that 20-day moving average and price support. So that's what I'd be looking for. But the further we drop, I mean, we were just up near 75 a little over a week ago, and now we're back down to 67 and change. Closer we get to 65, the better I like it.
All right. Excellent. That was 10.
10 in probably about 11 minutes.
Not bad. I think we did really good. And I know we started late, so excellent. Those are your symbols right there on the screen. And those should be up in the Market Watchers Live chart list shortly after the show. And you'll get all those annotations, etc. So just go to the blogs tab, select the Market Watchers Live blog, and you will find that chart list link at the top, as well as all of the Market Watchers recaps with our timestamps for those of you who watch it later. And with that, I think it's time. You know what time it is, right?
It is.
Let me get over there. it is time for our discussion on this really great conference that's coming up in August. And here we go. So, if I can get back up here. It's all about risk. And I think really when you come to this show and watch it, and most of the questions that end up in the question box are about risk and trying to reduce risk, how we use stops, et cetera, et cetera. So this is a great conference for you to go to, and you don't have to go anywhere but to your desk, because this is an online conference. So it'd be very similar to what we do here on Market Watchers Live, only you'll actually get to see us as we stand on stage and present for you. And there is a chance, I think, we're going to do a live show there, you and me, in actually the same room, which would be interesting.
Oh, I hadn't heard anything about that.
Yeah, I heard that flying around. Dave Keller, who's going to be on our show on Wednesday, is one of the presenters. He starts off day 2. And then if you really would like to really do it up, you would want to come and actually be there in person, because you still can do that. And we only have a few seats in there. We don't take a bajillion people. That is a number, by the way, bajillion.
Yeah. We got it on a chart somewhere, I'm sure.
Yeah. So it's a very select small group, and you can sit around and talk with us, or you get to go. The best part, if I can get back here. There we go. So you can come as a VIP and just go for the 3 nights and 2 days. We do have receptions. There's the planned dinner. But honestly, we're out and about pretty much the whole time. So you will not be lonesome, and you will probably be able to corner one or more of us throughout the weekend. And then if you really want to get into it and have a nice vacation on top of it, and summer vacation time, I would think people are thinking about that. I think the cruise is a great deal, and one way to talk your significant other into coming. So hopefully you'll join that. I know that the VIP packages are going fast, and March 31st is when we are going to close the registration for that. So without any further ado, I'm going to move into the final market update. All righty. And here we go. So actually, I want to make sure this is the most recent. So I'm going to refresh. And here we are. Okay. Yeah, obviously not a good day in the major markets. As you can see, we continue to go down and set new intraday lows at this point. The NASDAQ also having a difficult day, but it does look like it may have found its support here. We will have to see if it can hold that 7,300, just below 7,300. We'll have to see if it can hold that. Russell 2000 small caps getting hit just as hard. The TSX again following suit. Treasury yields are down somewhat. They did start the day up, but currently reading at about 28.37. And we can see UUP gap down and is continuing lower. Commodities, bad in the morning, but starting to recuperate. As you can see, oil, it's still having difficulty getting to the positive, though, for USO, but it is making its way and making that attempt. But overall, between the last 2 days, it's still up. We can see that GLD has formed this really beautiful intraday flag, moving up quickly. We'll have to see if that flag will execute and bring gold even higher. And the VIX rising as fear is rising. And I think we talk about the sentiment within our chat room. And honestly, our numbers are a really great way to figure out the sentiment. We have a lot more viewers when the VIX rises for some reason. And then I wanted to put in the S&P 400. This is actually the iShares version ETF of the S&P 400. And you can see mid caps getting hammered every bit as much as the rest of the markets at this point. I'm going to go take a peek right now at our market summary, give us an idea of what the sectors look like right now in industry groups. You can see lots of red going on here. All the major indexes in the red right now that we cover right up there. We've got sector spiders. Utilities is the leader, but it's still down 0.6%. So we're not looking at a strong day for any sector. Technology, of course, getting hit the hardest, with XLK down 2.72%. As far as our industries go, gold is the leader, mostly unchanged, but in the negative currently. So again, all of our U.S. industry groups are down. Utilities and commodities are the only ones that are standing upright, but they are still down over 0.75% today. Oil services down 3.3%, and semis, which we've noticed with the NASDAQ as we go through, computer technology, all down over 3% today. And with that, I am going to complete the market update and pass it back to you, Tom, for some, if you had anything you wanted to add while I get my DP report together.
Yeah, I'll go ahead and just go over a chart or two here. Yeah, energy, some of the energy areas really look weak to me. I mean, we had, and I mentioned this, I think, in my blog earlier today, we had such a huge run up in some areas. I could pull up, actually, let's look at the weekly chart. This is the integrated oil and gas index. But you can see that this index went up from about 525 to 635, so 110 points, or what is that, close to 20% in 5 months, 5.5 months. Yikes. And literally in 2 weeks gave it all back. And that shouldn't happen. I mean, we were rising, came back down. Check this out. We held that rising 20-week moving average, moved up, went to a multi-year high, and then it just completely fell apart. Everything about this energy space really fell apart. Here's the XLE, which also had broken out to a high, completely fell apart, trying to hang on to a key area of support. We could say it stretches 64 to 66, but we haven't had a weekly close below 66, and that's where we're sitting right now. So this week is going to be somewhat important here on the chart, and you can see that the selling that took place, and I'm not a big fan of volume on ETFs, because ETF has to go wherever the price of the underlying stocks goes. It doesn't matter what the volume is on the ETF. It still has to go. But I think it does show you that there's a lot of interest on the sell side with that kind of movement to the downside on the XLE and lots of volume coming in. So anyhow, that was really what I wanted to share, just the fact that energy, we got a lot of weak areas, obviously, to start off this week, but energy, I think, has been one of the weakest areas over the course of the past couple of months. Even with the rebound in the overall market, XLE really hasn't participated.
All right, let's get to the DecisionPoint report. If I can get to the screen, there we are. Okay, so first of all, I'm going to show you the blog, because this is where I got a lot of my information. Carl, my father, writes the DP Weekly Wrap on Fridays, and he goes through not only the daily charts, but the weekly charts as well. So I suggest you take a look at that. He pointed out some bearish rising wedges, which I had noted earlier, and I'll be looking at as well. And you can find my live chart list right here. And the charts that I'm showing you today are in that chart list. So you can go and catch all of the charts I'm getting ready to go over right in there. So I'm going to start right off. Let's look at the Dow. And what I noted here, I did not see a rising wedge on this one. If anything, I think you could have put in a rising trend channel. And then we were looking at the possibility of a symmetrical triangle. And I'm going to come in here just to draw it so you can see what I'm talking about. But it, in my opinion, it's disintegrated. Really, as soon as it gets really that close to the apex, you're going to get some sort of breakdown, breakout. It's going to have to come out of that triangle because there's nowhere else for it to go. But those are continuation patterns. So we've all been looking for that breakout above that declining tops trend line. But what's happened, we got a pretty serious breakdown here. I'm looking at support down here at 24,000, maybe a retest of the earlier March low. So not a good breakdown there. But what I want to show you here, I'll just leave that in there in case you guys want to go peek at that. Show you very quickly the Dow weekly chart. And it's rather worrisome, I would have to say, because, you know, we do have room for it to go down even further. But see that 24,000 level? I think that really makes sense as a level to test if we're going to continue down in the short term, which I believe we will. And look at this PMO sell signal on the Dow on the weekly chart. Not good. Let's look quickly. Here's the NASDAQ. I'm just going to go through daily, weekly charts all the way down, and then I'll mix it up with some of our indicators in between. So here you go. First of a bunch of rising wedges right now, and I'm pretty sure I had these annotated before Friday. So I was looking at these, I think, earlier, but I'm not going to give myself complete credit for that. So anyway, rising wedges are bearish patterns. So, you know, we were looking at a lot of triangle patterns. Well, obviously there was no triangle on the NASDAQ 100 chart. There was definitely this rising wedge, and we've gotten the breakdown below it. We're sitting here right at that 50-day EMA. This is going to be really interesting to see if we're going to get that PMO sell signal on the NASDAQ 100. We haven't had a negative signal on the NASDAQ since, you know, before mid-February. So I would be interested to see if we're going to finally see some true weakness here coming in for technology. Looking at the weekly chart for the NASDAQ 100, nothing overly exciting here, but I do not like to see the PMO in this oversold area, and now it is pointing down. So just some food for thought there. My OEX chart. This one I did have a rising trend channel. Like I said, I think that's similar to what was going on the Dow. But what I would note, first of all, I'm going to have a PMO sell signal come into play today on the DP scoreboards. And I did not annotate it, so I'm going to do it right now. It's pretty much a textbook double top, and our neckline or confirmation line is down here at 1170, and we're on our way down to at least test that. I suspect, depending on what's going on in the rest of the markets, that we won't see the breakdown from that double top. But boy, things are starting to really look a bit worrisome. I'm more concerned about the short term, because you'll see later that my intermediate term indicators are still looking pretty good. So, all right, there we go. Yes, we'll save that. And the weekly chart for the OEX. Go really quickly here. So you can see that rising bottoms trend line there, and we are sitting right on it as far as the weekly chart. And I'm not using this particular point. I'm looking at the close from that actual week. So we are still looking at a rising bottoms trend line. You know, you could make that case like we were saying for the triangle, but at this point I would be concentrating on the rising trend channel and whether we can hold that area of support there at about 1175-ish. The S&P, and again, lots of people asking me about the symmetrical triangles on a lot of these indexes, and I did have some of those annotated previously, but I think these rising wedges, which I believe I switched to earlier, you know, late last week, we're getting the expected breakdown from these rising wedges. And now you can see, as far as the S&P 500, we're getting very, very close to a PMO sell signal as well. Now, I'm not overly worried about I'm not overly worried about a huge bear market drop at this point, but there are some signs that we should still be concerned, and which is why I'm still bearish right now in the short term until I can see a nice bounce off of these recent drops, especially today. So at this point, looking at the OEX, the S&P 500 weekly chart, I'm not seeing a whole lot here, but we do have that rising bottoms trend line like we were looking at on the OEX. And it's still there. It's still sitting there. But this is, you know, overbought PMO sell signals in general are just not good. You do not want to see them, obviously. But you can see, since we've come off of this bottom back in 2016, these sell signals haven't resulted in too much damage. So I'm not overly worried about this. We got that sell signal, of course, on the big drop. All right. IJH, like I said, we looked at I talked about earlier, we're sitting on some very important support right now between the 50-day EMA and this support resistance line that I have drawn from the December high right there. So this is pretty important. We need to see it hold for the mid caps. We see that breakdown. I would be probably drawing a rising bottoms trend line here if we continue to see a breakdown. But I think that, the hope is that it will hold that 50-day EMA. The PMO doesn't look overly negative. It has topped. But if you recall on those other, the large cap indexes, we already were getting ready to get sell signals there. So, and the OEX already had one. Looking at IJR, the S&P 600, again, we're sitting on some very important support. We need to see that hold. Yes, the PMO is topped, but on this recent decline, I suspect we'll see resurgence. But if we get that breakdown below 78, I'd be pretty concerned. Weekly chart for the S&P 600 ETF. We're getting this big double top here. If I were to look at this chart without seeing the daily chart or knowing what's going on, if I weren't putting some of the fundamentals in my head as to what's going on with strength in the market, this chart would have me pretty worried, because you can see a double top that's forming. Could see that breakdown. We've got that top below the signal line on the PMO. Not a real healthy chart, but I know that the rest of the markets are not overly weak. I'm still comfortable. At this point, I'm not looking for a giant drop there down to that 70 range. Ultra short-term indicators today, nothing overly exciting. We did have some elevated readings as far as breadth was concerned. Today is going to be the interesting day, because we're getting ready to come down and possibly puncture the bottom Bollinger Band on my inverted VIX scale. And I invert it because when I get a penetration of the lower Bollinger Band in the very short term, you usually will see a rebound. You'll see a snapback. And so I'm expecting a snapback if we end up with a piercing of the bottom of this lower Bollinger Band, and it comes with some elevated breadth readings, but we'll have to see what happens at the end of the day. Short term here, I know we're getting low on time. This is why I'm bearish. These short-term indicators are continuing to fall. We're now getting the STOB below that zero line, but you can see here, even in the thumbnail, there does not look to be any interest on these indicators to stop dropping. And we have seen, obviously, when we had the big correction here, we did see a drop to very oversold territory. Right now, we're getting ready to hit what has been oversold territory at about minus 200. So we'll be watching to see what happens as far as a bottom on these indicators and whether it comes in above or below that previous bottom. But for right now, I think the short term's looking pretty ugly. However, the intermediate term indicators aren't that bad. They've actually ticked up as of Friday, and they are also, you can see they're trending higher, and the previous tops are higher than the new tops are higher than the previous tops. I think it's Monday today, isn't it? Intermediate term indicators are still rising, so I'm not terribly bearish as far as the intermediate term. The dollar and gold, they're very negatively correlated right now. And the problem I'm having, I have been bullish on the dollar now for, it seems like forever. And it just hasn't come to fruition. I think I came in feeling pretty bullish after we got this second bottom for a double bottom. But then, of course, we got the penetration here of that confirmation line, but it came right back down, and we're now struggling at that 2360 area as far as UUP. But we still have a rising PMO. The PMO is not really broken down that much. And the weekly chart, it does show the issue of that area at 2360. I mean, that's, that previous low we had back in the summer of 2017. And it's really struggling. But I think we're going to get past that. You can see right here, as far as the weekly PMO for UUP, it's rising, and it's almost had a positive crossover buy signal. Gold, of course, I feel the opposite about. I am bearish on gold. I still think we're going to see the execution of this kind of a complex double top. I'm looking for a drop. I'm really looking for that breakdown. I think we could get down as low as 1260, but we do have some support sitting here at that November top, right around 1300. But I think if we hit 1300, there's going to be enough bearishness amongst the participants that we will probably see it move lower, maybe test this 200-day moving average. But you can see the PMO is pretty ugly, continuing to move down. And if you look at the weekly chart, here you can see that area of overhead resistance. It just can't seem to be broken. You know, I've been waiting for it to hit that $1,400 level when we had started up this first time, and when it failed and then came back and then it failed the second time, it's bearish to me. And we've got a PMO, a weekly PMO sell signal just about ready to trigger here. So I continue to be bearish on gold, and here we go. There we are. I still see that symmetrical triangle here on USO. I don't like the fact that the PMO has been trending lower, as if you look over here, prices have been trending somewhat higher. So that's not positive, but we do see the PMO is turned up. And we can see that the scooter is still staying pretty strong. I'm concerned, though, about USO when I look at the weekly chart here. You know, I'm seeing this area at $14 now. When you come back here, we just haven't been able to do much here. We do have a symmetrical triangle like we were seeing on that daily chart. And, you know, if you want to make a case for a possible flag, but this is the problem I have. I can't get overly bullish in the intermediate term because I do have this topping PMO in overbought territory on USO, and that worries me. TLT, kind of a mixed bag, but I'm mostly bearish here. Yes, I am mostly bearish. We do have a PMO buy signal, and the PMO is rising, but you can see we failed to get up here to even test this low from October before failing and falling down. I mean, we could be, you know, forming kind of a complex cup with handle here, but here's why I think that we're in trouble. And I know we have just a few minutes. I'm seeing this giant triple or this giant head and shoulders on the weekly chart. And I don't know how many would agree with that as a head and shoulders, certainly a slanted neckline. And it's positive that we did get that bounce off that rising bottoms trend line or neckline. But we'll have to see. It's really important to see it hit that overhead resistance. And the PMO is starting to turn up, but it hasn't quite yet. I'm just really worried about this big old head and shoulders pattern on TLT. So with that, I will conclude the Decision Point report. We just have a few minutes, I know. I will be posting this in the Market Watchers live blog recap, so you will see these charts, these PowerPoint slides there. I won't go over them in detail right now because I know we're low on time. But there you go as far as our outlook, and then the big four, as I call them, where I am sitting right now. And there you go.
All right. Well, thank you for that update. I do want to remind everybody that Oracle reports tonight after the bell. And I was just looking at their chart, and on a weekly basis, they had a negative divergence back in September on a weekly chart, and then put in a bearish engulfing candle. And we went all the way back down to test price support and the rising 50-week moving average back near $46 to open 2018. And since then, we've been trying to move higher again. So Oracle is going to be a very interesting report tonight. You know, my gut feeling is that they come out with strong earnings, but with the market being so weak, and if we finish weak, a bigger question might be whether or not the market even cares.
Mm-hmm.
Because when we get into the selling episode, a lot of times the market just doesn't care. And always, I mean, I know I've been bullish, but you always have to pay attention and respect the volatility index when it's up over, you know, this 16, 18 area, and it is up 37% today to 2166. So you got to be a little careful. I don't take on new positions. I won't be adding anything with the VIX up at this level. I want to see a little bit of strength first.
Mm-hmm. You can see our weekly schedule right over here. We've got Bill Shelby coming in tomorrow. David Keller will be with us on Wednesday. And Tom, you got a workshop on reasons to sell, I think is what we were calling it, for your workshop Friday.
Yeah, I'm looking forward to it because we always get questions. First of all, it's easy to buy. I mean, you got all kinds of reasons why you want to buy. Somebody could just tell you that a stock is good and okay, I'm going to go out and buy it. And a lot of times we buy without even thinking about where we're going to sell or what might trigger a sell. But I'm going to talk about some of the sell signals, some of the things that I use in terms of getting out of positions. Some could be, signs when I have a profit. Others could be simply where I might set stops. But there are a lot of different reasons why you might sell, and I'll go over those, at least a large number of them on Friday.
Awesome. Looking forward to it.
Yeah, should be another great week, although we're off to a rough start with the market. But hey, things can change in a day or two, and we'll have to wait to see. We do have the Fed coming up on Wednesday announcing the latest interest rate news there and their policy statement and so forth. So it's going to be a couple of maybe nervous days ahead of that Federal Reserve announcement. I do want to thank everybody for stopping by and being with us today. Please remember to complete the survey as you exit. It's at the bottom of your screen below the chat window. You can just click on that "How'd we do?" There's a link there. Very brief survey, but we'd love to hear what you think about Market Watchers Live. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody. We'll see you back here on Tuesday. Happy trading.